in terms of the outlook, so one of the views that we have is that China, for the past few years, has been trading very much on hope, and it's been a place where people would have typically sort of bought the rumors and sort of sold the facts, sold the news. We think that this time around, the situation is different with China. This time around, the rally that we have seen so far this year, and let's remember, China has been one of the best performing markets globally so far this year. And this time around, it is driven by fundamentals. And that is what is different versus previous ebbs and flows in the Chinese equity markets. This time around, it's driven by fundamentals. And by fundamentals, there's a couple of things. The first one is that if we look at policy making in China, whether we look on the monetary side, whether we look on the fiscal side, even on the regulatory side, essentially China has a coordinated, accommodative policy across all these three. Yes, perhaps on the fiscal side things could improve, but directionally we've got all these three channels where China is being accommodative. And we have seen China fiscal stimulus since the end of last year, sort of Q4 of last year, and we have seen the impact of that fiscal stimulus onto consumption, onto retail sales, which the most recent number has surprised on the upside. And to me, what is very interesting about that is that a year ago, a lot of market participants would have questioned the potential impact of fiscal stimulus. Now we have seen the subsidies come through, and we have seen the impact on the retail numbers, which means there's a clear linkage between the fiscal stimulus and consumption, and that sends a very strong signal to both policymakers and market participants. So that's one of the elements why we think this time around fundamentals are taking sort of a front seat, and we've also got the AI developments. A big sort of breakout moment for China earlier this year. China doesn't just China innovates. There's a clear evidence of China now innovating, and we also have policymakers embracing the private sector, embracing the new productive forces. This potentially is a new chapter for China tech. And we have seen earnings in that space, predominantly on the offshore market, being very strong. That's what we mean when we say fundamentals are taking a front seat. Now, the onshore market, obviously that has not mirrored the performance of the offshore market. But what is interesting about the onshore market is that's the market that's a lot more insulated to what happens to the outside world. It has its own sort of dynamics. And while the upside has not been unleashed yet, the downside is somewhat protected. There's an implicit sort of downside protection. And what I mean by that is essentially whenever it's needed, the national sort of champion is buying in China. You've got reforms on the pension side that could create, more structural flows into that part of the market. And you've also got, very high savings in China. Chinese households have about 35% in savings. That's the highest in the world, if I'm not mistaken. The next market is Switzerland, that has about 20% in savings. So China it's quite high. And in the past, it was because the property market is very expensive, and as a result, Chinese households needed a lot of savings to be able to have, to be able to afford housing. Housing these days is not really the main channel for investment, for investments. Potentially the equity market can become that. So that's another sort of layer of where we could see a support to the onshore market. And we have not seen the upside being unleashed yet, because that's where we need to see more fiscal stimulus happening. That has, fiscal is happening, but it's not happening to the extent where perhaps the markets would have wanted it to be. But let's also not forget that Chinese GDP growth has been, the target is 5%, and we've been at more than 5%, both in Q1 and in Q2 so far. So, perhaps the urgency for Chinese policymakers to do more on the fiscal side, perhaps that means a little bit more patience.
What about on the monetary side? We are hearing from the central bank governor this morning. They will improve monetary policy toolbox, also indicating that the yuan has become the world's third payment currency. In terms of stimulus, in terms of support, what more can the government do?
I think the important thing is that more can be done, and more can be done because there's two elements at play here. First of all, inflation in China is low, unlike other countries around the world that are sort of facing sort of more challenging inflation sort of outlook, and Japan is one of them. Although in Japan it's good inflation, so that's an important thing to remember. China has more of a disinflation, deflation sort of concerns. Core CPI has been moving upwards a little bit, but it's still stuck close to that, 50, 60 basis points or so. But the fact that inflation is this slow allows the central bank to do a lot more on that front, and reforms in that space are definitely sort of welcome news. So on the one hand, it's inflation. On the other hand is the dollar. And the dollar has been a weak currency throughout this year, perhaps the surprise of many, given that, if one had the crystal ball early in the year, and given kind of, post-Liberation Day, the level of tariffs, most would have expected much stronger dollar. Clearly, the exact opposite has happened. And the important thing for the PBOC is that this very much allows the PBOC to continue with its accommodative stance and even push further on that front.
China relies on Iran for cheap oil. Could there be any negative shock to the market if that becomes disrupted by the Middle East tensions and the war that is going on there?
I mean, clearly, oil prices moving upwards is disruptive and can cause volatility in markets. We saw that on Friday, somewhat sort of subdued, and markets sort of quickly recovered after that, and we're seeing a little bit more of that overnight, a bit more of that volatility. I mean, usually, kind of the 101 of an inflation spike means that the oil exporting countries, China clearly one of them, but there's a lot of other countries in that space, the oil importing countries perhaps face a little bit more volatility on that front.